What's happening? What's happening? What's happening, everybody? Hey, how you doing? I'm glad that you got through. Um, let's get right into it, man. Let's get right into it. Where are we? What is this? Price action. I'd like to welcome y'all to the Price Action recap for October the 11th, 2022. Yeah. What's going on, man? Welcome, welcome, welcome. If it is your first time tuning in, I like to say welcome. If it's not your first time tuning in, I still like to say welcome and thank you for always pulling up, and hanging out with me and Spidey back there. Y'all see Spidey hanging off in the cut like he always do. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. Monday through Friday, we get on here twice a day, once in the morning at 9 a.m. Eastern Time, once in the evening, typically at 6:30 p.m. Eastern Standard Time. During football season, yeah, we pushing it back, doing it at 7:30, but today we're doing it at 6:30 because there was no need to pick up football practice personnel. Yes, so I do Tim's Tidbits just to share my thoughts on the price action, what I see, how I think it's going to move, how I believe it's going to move, what's the most probable moves. Just read the candles like a hot, steaming novel. I just try to do it in a way where someone can hopefully get their aha moment. You know, I had somebody explain something in a way that I just understood and I got my aha moment. So that's why I get on Al Gore's internet and share it the way I see it, in the hopes to give somebody their aha moment. But Tim, what do you teach? I'm glad you asked that little question, little Tim Rogers. I don't teach a thing. I just share the stuff that I learned from ICT with his trading concepts. He give it away for free. I give it away for free. I'm just saying it in a different voice. Somebody told me today, they said, I can relate to what you're saying. I can relate to you. And I appreciate them for that. I appreciate this is why I do it. This is why I do it. Yeah. Let's see what's going on in the chat. Y'all late for class. Late? Are we late? I don't know. What's going on, Tanya? Cool it now. Hey, watch out. What's up, Cool it? What's going on? That's me. The link is in the chat. The link is in the chat. I did not pin the link in the chat this time. Let me go and pin the link in the chat so that if anyone wants to pull up and ask a question, then they will be able to, because the link is in the chat, but I shall pin it to the top of the chat. The comment is pinned to the chat. Y'all do me a favor and smash the like button. Smash the like button as y'all come in the door. Okay. The link is in the chat. The link is in the chat. The link is pinned to the top of the chat. Who else up in here? We got Here to Learn and Share up in here. What's going on? What cool it said? What's going on, Tanya? Can I get a copy of what's going on, Thomas K? A lot of dilly-dally in the day. And we went up, we went down, we went up, we went down. Today, the market just went up and down, but it actually traded very technical today. What's going on, Laverne? Let's get into. Oh, you know what? I just noticed I had this video. I was looking at Dustin's video today, and I just want to share something with y'all. For all of my fundamental people, all my fundamental and statistical people, I want to share a little snippet of a video that Dustin did today. It's his they do the closing beat every Monday through Thursday, and they talk about the stock market. And today he shared some statistical information, and then he has shared this is the little piece at the end, because he be talking. Well, I do this other piece over here first. This is some statistical information that he shared as far as like interest rates and inflation and stuff like that. and he broke it down in a pretty cool way. I thought. Hopefully, y'all can keep up with it if it plays.
To inflation. We're about to get the inflation number. What's it going to say? Well, take a look at this.
Can y'all hear that?
If that's not interesting, let's take one extra step here, because
can y'all hear that? Let me know if y'all
can
hear
that. You know, the shorts, you know, do your thing real quick there. Well, I did one, and I was talking about food prices because that will play into inflation. We're about to get the inflation number. What's it going to say? Well, take a look at this. Here is the food input inflation number. And then all I did, so the light gray over here, this is the basic inflation for producing food. That's just a simple way to say it. The cost of your goods going into the product that you hopefully eventually will sell and make some money. Obviously, we've seen the inflation there. Basic forward-looking analysis is a simple algorithm you can use just to project what could happen going forward. What's the probability of inflation falling or rising? We see that inflation, in terms of the cost of goods that it takes to produce this food, is actually pretty much peaked, right? So what does that mean? Do you get cheaper food, right? Are prices going down? Sadly, no, probably not. Here's the reason why. We can actually look up the percentage of in-stock items by category. Right? There's any level of data you can track these days. That's where we spend our money instead of, buying fancy things. But here's what we have. Just give me an example here. My favorite down here, candy. So if we look at candy, last year, 88% of the shelves were filled up, meaning 88% of the time you'd go try to get that candy you want to buy and it was in stock. 12% of the time it wasn't there. It was out of stock. Now this number is a little bit skewed because we're coming out of that COVID time period where everything basically shut down. Look what's happened this year. We're only 89% in stock, meaning we're 11% out of stock, right? Now look through some of these things here, right? As you look through, there's only a couple areas have gotten better. Your ketchups and mustards and things like that. You can come down here to some, we basically bulk fill up the refrigerated column there, but we don't have a big change year over year. Take it a step further and we go, well, what happened last year? Right? Were there a lot of sales? These are all the promotions in there. So this is broken down by quarter and by year. So for example, in the first quarter of 2019, lots of promotions. Right, that's exciting. 2020, less promotions. Well, the first quarter, we didn't really have COVID severely just yet, but look what happened in the second quarter. No promotions. Why would they promote? They're basically selling out of, remember people buying toilet paper? Why would you have a sale on toilet paper if everybody's buying 100 things of toilet paper? You go into the third quarter and fourth quarter, very low promotional events happening for different products there, right? Well, look in the first quarter of all the last 4 years, promotions have gone down. Second quarter, promotions have gone down. Third quarter, promotions have gone down. This year, promotions are the lowest they've been in 4 years. So in the fourth quarter, why would somebody go, hey, we have a lot of candy that's not on the shelves? If it's not on the shelves, then why would we have a sale? We can't get the product, right? We want to see shelves that are filled, and kind of like Target's likely going to be announcing at their earnings there that they have excess inventory. And so they may have to have some sales to burn through that inventory in order to make room for the holidays. By the way, their holiday inventory is probably going to be high as well, but we'll find out eventually. So the bottom line there is, if we were to just real quickly go through this, you have costs of goods for food probably peaking there, but we're not getting enough of it back on the shelves yet. And because we're not getting enough of it back on the shelves, why on earth would you have a sale? So the cost of your end purchase of food is likely not going to be going down, at least for the rest of the year. So sorry to say that, but I just want to point that out. Now, what do you do? What does that have to do with stocks, Dustin? Right? What stocks will likely be benefiting from that? What stocks will get hurt from that? Like I just mentioned, Target having a bit of an inventory issue and likely continuing to have an inventory issue. So is that going to cause them to sell products at a higher price, which means they'll make a bigger profit? Probably not, right? So does that mean now's the best time ever on the history of the earth to buy Target? Probably not. I can't tell you what to do, but it gives you a chance to actually take a look at things like that. Poor food prices, in particular my candy. That's where I'm really frustrated about that darn candy there. But it's what it is. Okay, looking around here, gold very quiet today. Right. Not much. Want to point out Netflix
piece down here. That was some statistical data on inflation. Well. One way to look at it in a different way. I know everybody don't try to do the technical thing. I know everybody ain't just all about day trading.
News for them. They could use that because
trying to find the one spot where it's something that he said I thought was pretty cool. I want to share with y'all.
Maybe they can make a few bucks. This area questions here. If I can answer your questions, and hopefully you learn something new. Let's see where the questions are, if I can find them there. Yeah, I almost forgot to hit that like button, huh? Yeah. Well, so that's a good comment. He says, well, it's the best 90 days, right? But unless the inflation numbers are high, then we get a big drop. I get that question a lot, actually, a variation of that question. When you say, Dustin, you show expected data going forward based on what happened in the past. But you're forgetting that this time's a little bit different. Every time was a little bit different, right? There's no linear path to growth or your goals or your investment returns or whatever. There's always something that tries to hit you right along the way. And that's hopefully what gives you the reason to buy. So every time there was something, this time there most certainly is something. There's many things. The next time there will most certainly be things. That never changed anything in the stats going all the way back to 1928 when we can first start tracking the S&P. There's always something going on. So never let that scare you, because you might find yourself going, well, that's great that this is the best 90 days or the returns are expected to be like average or whatever, but not this time. This is the end of the world. And, come on. How many other times could we have said that? You can't take it out now if you won't take it out back then. So if you were to go back and say, ooh, World War II, that was really nasty. Let's take out all the performance from there. Can't do that, right? I mean, you could, but it wouldn't be advantageous of it to, because you're now saying that that event was as significant as this event. And who knows? That's a tough one to say.
Yep. So just want to share that stuff right there with y'all. I thought that was pretty cool. A pretty cool way to look at the statistical data on the inflation, the cost of, how much it costs us to get the food, and how much it, what I'm saying, how much is how it's gonna like affect certain stocks. Just a different way of thinking about things if you looking at your long-term portfolio, and then looking at the is this time different scenario. What I'm saying, like, hey, this pretty bad. We ain't never seen times like this before. Every time we ain't never seen times like this before. What I'm saying, Dustin them got a tower that they gave me. They give the clients, and it says the stock. Let me get where my towel at. I got it pinned to the wall. So guess I can take it down. It says, ain't sweating it. The market recovers 100% of all declines 100% of the time. Jazzwealth.com. And it's a towel because we ain't sweating it.
Look, you took that one down, but here, get some more over here.
Oh, yeah, it is one over there.
Like 2 of them.
I forgot about that. I took that one off the wall. Thank you. I forgot. I took the one off the wall. I forgot it. There's another one. I ain't had to take the one off my wall. That's the first variation of it, and then that's the second iteration over there. But yeah, man. Anyway, let's go ahead and get into it, man. Let's see what we got going on today, man. Something was going on with my trading view. I could not save my updates on trading view. What's up, Kareem? What's going on, Kareem? Hey, did y'all do y'all appreciate when I be playing the little clips from Dustin? Before we get into it, let me ask the question. Do y'all appreciate when I be playing like the little snippets from Dustin, the stuff that I be finding like super interesting? Or y'all be like, Tim, please get out of here with this. We came to hear you talk about the ICT stuff, man. Do y'all let me know. Put a 1 in the chat if y'all like that, and put a 2 in the chat if y'all want me to stop. I'm put this back on the wall while y'all put that in the chat. 15-second delay. I'm counting down now. Put this back on the wall. I see 1-1. I see yes. Great info. Thanks for sharing. Yes. 1-1. All right. So I guess I keep doing that whenever I If I hear something on there that's super interesting, I'll do that. I'll keep sharing it. And if y'all want to just pull up yourself, there is Jazz Wealth Managers on YouTube. They go live. Appreciate that. They go live at 5 Monday through Thursday and do like the closing beat. Let's go look at Spalene. Y'all sing it with me. Spalene, Spalene, where you at, baby? Here I go. Hey, how you doing? See, man, Spalene, I don't know what's, I updated this chart earlier, right? For some reason, I can't say. I restarted my computer. Let me see if it'll save now that I restarted my computer. I'm just going to move a couple lines, and then I'm going to go in. I'm going to save, and then I'm going to close it, and I'm going to open it back up. Sing it with me. Spalene, Spalene, where you at, baby? Here I go. See that? It won't save. It won't save anymore. I don't know what's going on with TradingView. It will not save. And that's, I'm signed in with my little free account. Yep. I'm signed. It will not save for some reason. I do not know why. Anyway, looking at today, we went up, we went down, we went up a little bit more. So, you know, and it actually was very technical. It was a very technical day. Let's just look at the price action real quick. If y'all got any questions, drop them in the chat. If y'all want to ask a question, pull up. Let's look at TradingView. I mean, Ninja Trader is not open, so we're gonna look at it on what is it? TradingView. Let's go to the ES, the continuous contract. Right? Look at the continuous contract. As you can see, up there it goes. It just popped up, but we are already on TradingView, so that's where we're gonna stay. As you can see, this was our previous daily bottom from yesterday. Right? I can't see y'all anymore. Make sure I can see y'all. This was our previous daily bottom yesterday. This green line right here at the bottom of these red candles right there. Right? This candle is what we've started right now. So that's just during the after hours. We opened up and we started pushing back down. We was at, this is Monday and this is today's candle right here, right? So this was our previous daily bottom and this was our previous daily top, right? Yeah, Monday's candle was the high and the low. Sell side liquidity, buy side liquidity, right? External on both ends, right? So we had right here, we had just pretend like this candle not here. We had a volume imbalance right here in between Friday and Monday, right? A volume imbalance. For anybody who don't understand what a volume imbalance is, a volume imbalance is a type of void, a type of so it's like you've only offered either sell side or buy side on that time frame, right? So the bodies ain't overlapping, so it's a volume imbalance because these bodies aren't touching. So this candle came down and pushed back up. Then this candle pushed up and pushed down, and both of them did it so far that they left imbalance where these candles don't overlap. Nothing overlaps but the wick. So that's a volume imbalance, and the market tends to go and get those. It treats them sort of like gaps. It treats them like gaps. It's a gap in a sense, right? So we had a volume imbalance there that we had marked out, and then the weekly stuff to the outside. We had this on the SPX. We had the weekly low on the low of last week, right? The low of last week, we had the weekly low, and on the SPY, we had it set as the weekly low for the low of this week, because the last previous low we had was way back a couple weeks ago in like September. So last week's low on the SPY wasn't as low as last week's low on the ES. That's why the ES had a lower low than what the SPY had, right? And the SPY had a higher monthly low than the ES because I didn't want to have the weekly low lower than the monthly low on the ES. That's why it was like that. That's why the monthly low is lower than the weekly on the ES and the SPY. Now, so let's drop down to 4-hour candles so we can start to look at what goes on throughout the day. So looking at the 4-hour candles, right? This is at the right before London opened, right? This is just before the New York Open, and this is up until like 30 minutes after the New York Open. As you see from like 6 o'clock up until 10 o'clock, nothing can stop me. I'm all the way up, basically on the 4-hour, right? And where do we go to? We went right to that volume imbalance, right to the peak of it. Right to the top of that volume imbalance right there. And then after we hit that volume imbalance, I'm going down, baby. Your street in the Range Rover, right? And made a new daily low. Bust through a new daily low. We hit this low throughout the night, right? Let's drop down to hourly candles so we can look at it in more detail. That's the price action in a nutshell. Now let's drop down to hourly candles and break down exactly what's a going on. All right. So we went over up until prior to 9 o'clock during the overnight price action. We went over this stuff, right? So now dealing from 9 o'clock forward, right? So from 9 o'clock forward, after we had took off, right? Remember when we was talking about whenever you get the reaction off of a level, that strong reaction, you know what I'm saying? You don't panic. You wait for the retrace back, looking for, you know what I'm saying, your entry setup, right? So as you see, we had the strong reaction off of this hourly order block down here, right? We had a strong reaction off of this hourly order block right here in the discount of the range, right? In the discount of the range. And make sure we on the proper range. So starting with today, because the market will hit you with, you know, staying in like when we're trading, like just say today's trading range, right? Starting like this is 12 o'clock, right? Today's candle started right here. This is where today's candle started at, right? So now, since we're trading well inside the discount of this entire range, this is some of them times where the market will use just this discount area and have a discount premium inside a discount premium. That's kind of stuff you got to be paying attention to. You got to be paying attention to that, where it'll just be working inside inside the discount premium, inside the discount premium, right? So as we, what is that? Oh, I put a fib on there. Let me just sit this over here for a second, right? So we came down overnight. We made a new low at 6 o'clock right there. Boom. So we made a new low at 6 o'clock on the 6 o'clock candle, right? And then we still, and then so now we made a new low. We had a breaking structure right here overnight. We had a breaking structure overnight. So now we have moved past, you know what I'm saying, this low. So now we shift our focus to this high right here, right? As our dealing range. We shift our focus to this high here as our dealing range to this low. Well, Tim, why did you shift your focus? I'm glad you asked that question, little Timmy Rogers, because this was our overall dealing range. Let me put that back. right, let me put that back and just copy this. Oh, copy this, and then I'm just gonna bring this down right here. God dog it, I hate when it does that. All right, so I'm glad you asked that question, little Timmy Rogers. I shift my focus to this high right here. No, this high right here. There you go. Shifting the focus to that high right there. All right, boom. So now shift the focus to that high right there. The reason why I shift the focus to that high right there is because we had a breaking structure below this area right here. We broke structure below this area right here. And now this day is starting to trade right in this area down here. So now we going here. This is our dealing range right there before, you know what I'm saying, before we went up. Boom. Now that we went up here, right, and broke through this right here, right, we broke through this this high over here. Now we start to move our dealing range back up, right? We're moving it back up. We're working our way back up until we get back up into the full spectrum of this overall this overall market, right? So boom, check it. We come up, right? We run these highs, right? We on these hourly candles. Let's drop down to 15 minutes. All right, so at 6 o'clock, we come there, boom. We hit this right here. We come down, right? We run external, right? We run external sell side liquidity, right? And then we coming up, and where do we deliver it, right? We run out external buy side out of the range, right? External buy side out of the range and go all the way up to before we go there, I showed this. That was early. We already showed that. We showed that in the beginning. So I ain't gonna go back, right? So now we come down and we go to where? Boom. We go through the external, we blow straight through and go straight to the external liquidity right here. Once we get to the external liquidity, boom, we stop and then we come back down to this fair value gap right there, right? And why did we go straight up to the external liquidity like that, right? Because we hit this hourly, order block, right? And they're in between this entire range right here on this leg right here. There's no PD array for it to attack outside of a swing high. That's the only PD array over here on this side that it has to attack, a swing high, because we very carefully, every 15-minute candle, you see it, every 15-minute candle came back up and made sure every piece of it was overlapped, coming all the way down. There's no order blocks. There's no fair value gaps. Every piece has been overtaken, right? Every piece has been overtaken. With the exception of, you can look at this potential order block right here, but they came all the way up and did what? Soon as it got to the external liquidity, stopped right there. Boom, stop, opened up, came down, wicked up one more time, got close to this I can't even think right now. Got close to this volume imbalance, right? And then we came back down and touched this 15-minute fair value gap right there, right? And then took off again. Boom. Now that we've taken this external liquidity and closed on the outside, now we're the focus is back to the full dealing range to this other high over here, because we've taken out all of these highs. All of these highs have been taken out. Now this is the next high up there, And this is, you know what I'm saying? Now it's back to this full dealing range. Technically, you can just look at this price leg right here if you want to focus on that price leg right there. But I just go back to looking at this one here, right? So I just go back to looking at that high right there, right? So we'll come over here down to that candle there. That's our low right there that we made, right? That's our low that we made. And looking at that, looking at the low we made, from the low we made up to the high right there, right? I mean, up to this high, this right here, right there, boom, right? That's the equilibrium for the overall move, right? That's the equilibrium for the overall move. So now we're in the premium area up here. Now we're in the premium area up here. Once we got into the premium, look where we came. Right to the tippy top of this volume imbalance, right? Right on this volume imbalance right here. And then notice what we came to over here, right? This rejection block on the 15-minute, right? This rejection block on the 15-minute. So once we got up here and we broke this swing high and this portion of the move, right? And this portion of the move, notice the algos, they took a little break right there, came back down and bought off of that right there. But look where it ultimately delivered price to. This 15-minute rejection block right there, right? That's why I said trade it very technical. This 15-minute rejection block right there. Matter of fact, I took a short off of that 15-minute rejection block up there. Somebody else hit me up and said they took a trade off of that 15-minute rejection block right there, right? Came to the 15-minute rejection block. Then we kind of dilly-dallied, and that was around 12:45 when we hit it. Then we kind of dilly-dallied a little bit, right? Then we dropped it like it's hot. Right there, we had our breaking structure to the downside right there, showing that the market wanted to move, came down, touched this order block, you know, pushed back up, came down and pushed back up one more time. Then after that, it gave up the ghost and came down right here around this time. I think the news that the algos use to move rapidly back down in the most expeditious fashion was something about the Bank of Great Britain or something, or some company in Great Britain. Hey, so I heard something on YouTube and they was like, it just came out. They were saying something, and then the market just started like crashing down. So, you know what I'm saying? The algos use that bit of information to push the market back down in the most expeditious fashion. And we came down after hitting this daily imbalance in the premium. We came down and delivered it down here, boom, right there to this external sell side liquidity. Down, baby, your street in a Range Rover, right? And if you look at the 4-hour candles, right? On the 4-hour candles, when we came to a daily premium PD array, which is a volume imbalance, on the way down, the only thing on the 4-hour that the market had to deliver to was this swing low right here. This, well, not swing low, but this low, this 4-hour low, that a previous low. That's the only thing. It ain't have nothing else to go to. You know what I'm saying? It ain't have nothing else to go to. It ain't have a fair value gap. It's just one candle on the 4-hour. So we got to a daily premium PDA, and the only discount PDA on the 4-hour that was there was this previous low. And when we came down, and you can tell that the market delivered. How can you tell the market delivered? Pang-ow! Got a strong rejection off of that level. Pang-ow! And that's why I say the algos use whatever that news was to get it down there most expeditiously, because on the 4-hour level, there was no discount. There was no other discount PD array that was down here. And we was at like 4 o'clock We was at 4 o'clock. We ain't had time to wait 4 whole hours to just melt back down and get to the bottom of this right here. We had to get down there fast. So the algos just used the news to get down there fast to run this low, because that was the only PD array in the discount on the 4-hour level, because we had just ran into a daily level up here. And that, my folk, is the price action for today. The one that I said it traded extremely technical. It was extremely technical today. I mean, it was an extremely technical day, because we didn't have any news or anything like that to be worrying about, even though the algo did use a little bit of news to move the market most expeditiously. Hopefully I was able to shed a little light on today's price action in the sense of, you know, the teachings of IC to the T, since that's what most of us trade. Hopefully I was able to share something with the information that Dustin dropped with the statistics on inflation, the cost of goods, the cost of food inflation, and then how it relates to the stuff on the shelves and how it relates to how the stores are advertising, you know what I'm saying, sales based off of, you know what I'm saying. So if they ain't promoting those sales, then you ain't gonna be getting those sales, and the cost of it probably ain't gonna be going down. And since they ain't got a lot of it on the shelves, it's probably gonna hurt their sales. And if it's gonna hurt their sales, what companies are gonna be affected by this? Is that part of your portfolio? Is that something you need to focus on? Is that something you're looking at buying? Is that something that, you know, just a little some statistical stuff? And then the way he shared the fact that, you know, we feel like, hey, we in uncharted water. You know what I'm saying? We ain't never seen nothing like this. It have been times when the Feds had to raise rates. It have been times when the Feds had to cut back. It have been times when we had COVID. COVID was unprecedented. We never seen nothing like COVID. The Great Depression was unprecedented. We never seen nothing like that. He put it, you know what I'm saying? Hey, look here. Every time was never seen before. And guess what? We ain't sweating it. The market recovers 100% of decline, all declines 100% of the time. jazzwealth.com. You hear me? Hey, man, that's all I got. What y'all got in the chat? What's going on, Christina? What's going on, Robson? You're funny. Y'all kind of quiet in the chat, man. That's it. I ain't got nothing. Y'all ain't got nothing. We gonna call it at 38 minutes. Did y'all get anything out of today? What's up, Mark? Did y'all get anything? Appreciate that. Here to learn and share. What's up, Mark? Did y'all get anything out of the day? Was it helpful? Was it not helpful? Do anybody got a question? Anybody want to pull up? If not, we gonna call it. Appreciate that, Tanya. Appreciate that. It was helpful. Does everybody got a warm and fuzzy about, you know what I'm saying, looking at the using the PIM-dash chart? Appreciate that, Sam B. Do everybody got a warm and fuzzy with using the PIM-dash chart? Not saying you got to implement all of that. Don't, you know what I'm saying? Don't be like little Timmy Rogers and try to implement everything and overwhelm yourself, right? But do everybody got a warm and fuzzy of like using the PIM-dash chart and like just say, you know what I'm saying, the only thing you're gonna do is trade the breaking market structure, fair value gap retrace, right? Using the PIM-dash chart, you understand, it helps you understand, okay, now that we in a premium, now I could be looking for a reason to sell. So I'm looking for it to break a swing low, right? And then move back up to a premium fair value gap to sell off of. You know what I'm saying? Or I'm trying to buy, so I needed to break a swing high and move back to a discount fair value gap to buy off of. You know what I'm saying? Are you bullish for the I'm never bullish or bearish. I trade what I see. I'm glad you asked that question, Christina. Um, the way the way the market moved for these 2 days is acting like it's trying to set up for a bullish week. That's how it's acting. You know what I'm saying? Because you know what I'm saying, usually on bullish weeks, we come down and set a new low early in the week, and then the rest of the week we, you know what I'm saying, move up and make a new high. You know what I'm saying? Or close higher than we opened the week. That's typically how, and then the inverse is the same for the bearish weeks. We typically move up in the beginning of the week and then sell off and, you know what I'm saying, make a new low, or excuse me, or close lower than we open, right? Depending on how far we go up or down, right? Um, crystal ball, crystal ball. Appreciate that. Nah, I ain't gonna hit him with the crystal ball. I ain't gonna hit him with the crystal ball. That's a legit question. That you feel me, Sam B. And Sam B, you already know the rules, Sam B. You got to put something in the private chat so I know you're not fun to let a bird out the cage. You're what's up with you? I hear nothing you saying, Sam B.
Yo, can you hear me?
Yeah, I hear you now. I hear you now.
Okay, I got a question. I just wanted to run it by you.
Okay.
I'm doing research. Can I share my screen?
Yes, you can.
Okay.
Let's get that sound effect. It bounced off a 4-hour order block. We're gonna look at that. When we going southbound, be careful. Did you share it? I don't see it, Jelly.
Entire screen, right?
Yeah.
All right, I'm sure right now.
Okay.
All right, so looking at, can you see this?
Yeah.
All right, so taking in what ICT and what I'm, learning here, this price leg, right? If we're focused on this price leg on the SPY, so right now we're in a discount. So this is my thought process, right? So like we're in a discount. This blue box is what was it? I think it was a monthly fair value gap. And then we're at the top of a
go out to the money. Let's see what it is.
Yeah, so it's that monthly fair value gap right
Okay.
here.
Yeah. Mm-hmm.
And then it's a bullish order block, right?
Yes. Mm-hmm.
So my thought process is like, okay, we're in a discount. We hit liquidity, and today, like we ran lows. If you look here on the spot, like we ran lows today.
Mm-hmm.
So we took liquidity from the low. So and then if we're talking imbalance up here, like there's an imbalance that needs to get filled, right?
Mm-hmm. Yep. Mm-hmm.
So taking all that into consideration, like I'm still learning what's it called? This right here, the PEMDAS, the PDAs or whatever.
Yeah. I call it PIMDAS, called the order operation. Yeah.
Yeah. So I'm still trying to I'm still trying to learn that and understand that more, but like my fault. So from what I'm seeing, based on this chart, it's like prime for a move up.
Yeah.
Am I seeing that right?
Yeah. That's what I was saying. The way it started, the way it's trade. That's what I just said. Like the way it's trading, it's acting like, you can leave it up there for a second. It's acting like it's trying to set up for a bullish week, because I don't know if you remember, I was saying I wanted us to go up first and then sell down, and put it back on monthly real quick for me. right? I wanted it to let me put this over here because I hate when people be looking at the screen and look like they're not looking at the thing on the side. But but like over there, you see like the bullish order block you was pointing out over there. Yes, right. I wanted us to go up, right? I want us to go up into the wick that we made on like come back over to October. You see that? Come all the way to October now, current October.
Wow.
Yeah, right there. See that wick that we had made last
Yeah.
week? I wanted us to go up and revisit the wick, right?
Mhm.
Go up and revisit the wick, get those imbalances that we made last week, and then push down into that bullish order block this
Right.
week. That's what I wanted us to do. But we started pushing down first, right?
Right.
So we start, that's why I say it's acting like it's trying to set up a bullish week because we started going down first, looking for the liquidity, and we were already in the discount instead of moving back to a premium and then coming down. You see what I'm saying?
Right. Right.
So that's why I was like, and that's why I was like, I just want to see how it play out because we have been taking care of a whole lot of work down here. And if you know, put it on the 4-hour candles real quick. And see, and then you notice how once we got up, like how we went up above that blue fair value gap you got marked there,
Yeah.
right? There's a volume imbalance. There was a volume imbalance up there on the daily level, right?
Right.
And so on the daily level, when we hit that volume imbalance on the daily level, we came all the way back down to run the lows of that that green counter next to it because there was no other PD array for it to hit outside of that on the 4-hour level. You see what I'm saying? So it like it came all the way back down there to deliver that back in the discount area. So it's looking like it want to try to go up, but since we, you know what I'm saying, since we ahead of CPI and we ahead of PPI, it's like it's one of the things where you got to be real careful because if you look at all of the imbalances that we got above that on the 4-hour level. We got a big fair value gap right there. You know what I'm saying?
Right.
And then those two 4-hour candles running down together right there. That's technically a liquidity void on the 4-hour level because we consolidated at the top and then we ran off 2 straight red 4-hour candles in a row. You see what I'm saying? Well, 3 actually is one right next to it at the end. You see what I'm saying?
Yeah.
So it's like a lot of liquidity above that we really need to go get. So, you know, whenever we go get it, we gonna go get it.
So that's the thing. Like that was like not confusing me, but like making me hesitant and thinking about it real lot because you're going for the rest of the week. We got Fed minutes, we got CPI. So like, you know, we're still in, you know, inflationary territory, right? But I'm like, okay, the chart's saying that based on what I'm seeing, the chart is saying that we have opportunity to go up now. But the CPI and all that could like, you know what I'm saying? So I'm just like, let me just sit this one out and like just watch what happens.
And we at that time, we at a point, I'm fun to share my screen real quick. We at that point, if you look like today, we had crazy divergence between the 3 indices, right?
Do I stop sharing?
You cool. I just put mine up. If you look at all 3 indices over here, right? If you look at all 3 indices, I'm just gonna shrink it down, right? Look at the Dow, right? The NQ came down and took out these lows. The ES came down and barely took out these lows, but the Dow refused to eat. You know what I'm saying? The Dow, it's like the lows on the Dow right here are much higher than the lows on the because we come back to these lows here. These the lows on the Dow. That's the lowest low, right?
Yeah.
But they different on the NQ and the ES. And then these lows right here, the Dow, the NQ ran them lows, but the Dow came down, didn't run the lows, and then wicked back up right after coming into this bullish order block right here. You see what I'm saying?
Yeah.
The NQ wicked up after running lows. The Dow wicked up after hitting the order block, and the ES wicked up after running lows. But we got divergence because the lows wasn't matching up on any of the three. And then the Dow broke this high right here, and the NQ and the ES did it. That's why I say we done had some crazy divergence between the three. You see what I'm saying? And the Dow is showing the willingness to want to go higher because the Dow broke the high, right? And then came back and didn't deliver to the external lows. And now the ES and the NQ have taken lows, but they still have yet to run this exact same high. You see what I'm saying? They haven't run that same high that the Dow. So it's setting up, it's acting like it want to go up, but it's one of them things where when you're in front of news, sometimes you have to wait for the news before you can just get in off what you technically see, because the news may, you know what I'm saying, just like today, you know what I'm saying, just like today when we dropped right here, right? This was just something from overseas, like some company in Great Britain, and the algos used it to push it back down to where it needed to go because it needed to cover a 4-hour span relatively quick. You see what I'm saying? It needed to cover this whole 4-hour candle. It needed to cover this entire 4-hour candle relatively fast because this was the only 4-hour PD array to match up with after running that daily PD array.
Right.
Yeah. So I mean, you seeing the same thing I'm seeing it. You know what I'm saying? If we ain't seeing it right, we both seeing it wrong.
Hey, as long as I'm not alone.
You feel me? You feel me?
Yeah, I appreciate you.
I appreciate you pulling up with the question. What Stack said? What Stack say? Great observation. The mindset to sit out. I'm just spectating the price action too. Yeah. It's like you just gotta, when we got this stuff with PPI, CPI, and all that right there, we just gotta see what happened. You know what I'm saying? We just gotta see what happened. Anybody else got anything before we get out of here? Shout out to homie Sam for pulling up, sharing the screen, giving his thought process. Appreciate that. Coolest say we going southbound. Be careful with the crystal ball and all. Appreciate that, Ali the GOAT, with Ali picture and everything. Hey, ping out. Y'all like that ping? Y'all like that ping out? Hey, we're gonna go ahead and call it, man. I appreciate y'all for pulling up. I appreciate y'all for dedicating your time to perfecting your craft. I appreciate y'all for wanting to get better at this. It take work, it take dedication, and it take execution, and it take educated execution to be profitable. It take educated execution and risk management. You know what I'm saying? And a lot of people try to make it seem like, oh, it's this mysterious thing, it's this mystical thing. You got to pay me $1 million so I can do it for you, or you got to pay me all this money so I can teach you how to do it. Man, everything you need to be profitable, you can learn for free, right? So I'm gonna share it the way I understand it for free until I reach everybody in the whole wide world, or at least everybody on Al Gore's internet. Hey man, like I always tell y'all, if the people that you love still here, call them and tell them that you love them, man. Ain't nobody promised tomorrow. Nobody. You know what I'm saying? It don't matter how old you are or how young you are. Ain't nobody promised tomorrow. So, you know what I'm saying? Call somebody that you love and tell them that you love them tonight. It can be a family member, a friend. You know what I'm saying? Call somebody and let them know that you love them. Take advantage of the time you got here. Take advantage of the time you got now. Because, hey, all of us might wake up dead tomorrow. I don't know. Anyway, I appreciate y'all, man. We're going to call it. Valdez, when you pulled up in here, we're going to call it. I'll see y'all in the morning at 9 o'clock for the overnight price action. And we're going to see what these PPI numbers do. What time PPI? 8:30? Is PPI tomorrow? Let me check that real quick before we get out of here. Is PPI tomorrow? Is it 8:30? Let's check that real quick before I get out of here. PPI. Yep, PPI tomorrow, 8:30. Right? FOMC minutes. That's just the minutes from the last meeting. I don't think that's really nothing to worry about because it's just the minutes from the last meeting. Everybody already know what they said at the last meeting. It's just the minutes. CPI Thursday at 8:30. Same time the job numbers come out. So we got PPI tomorrow, 8:30, CPI tomorrow, and job numbers tomorrow. Yes, appreciate that. Appreciate that. All right, man. We're gonna go ahead and call it. I'll see y'all in the morning at 9 o'clock for the overnight price action. Yo! Yeah, man. Gone.